So let's build this type of portfolio, which is an easy, safe, diversified, and can give you dividends every single month. So we're going to build a 3 dividend ETF portfolio today that you can rely on, that you can use, and start investing right now. Hello everyone, Alex is here. Hope you're doing well. I hope you're staying safe. Today is a super exciting video for you here. We're going to be building a sustainable, reliable, and super safe dividend ETF portfolio, where you can get dividends that you can rely on every single month. What can be better than putting your money to work and getting this passive income every single month? Let's start. Stock market is a thing that always moving up or down and whatever. Everybody is watching it and trying to predict what's going to happen next, which stocks I need to buy, when I buy those stocks, when I need to sell those stocks. Are there any dividends paying stocks? Which are those? Are going to cut their dividends? And you might have so many questions around all this stock market investing situation, but the problem is there are not so many answers, and there's no single answer what to do there. That's sort of a problem, right? And I also made a video what I do personally when I pick stocks and how I do it. You can find the link there. So it's definitely something you can do on your own as well. But also there's another good way to make sure that your portfolio is easy. You don't have to spend hours and hours maintaining your portfolio or rebalancing and stuff like that. You don't have to spend time finding stocks you need to buy. But also you can generate income from this portfolio that you can rely on every single month. So let's build this type of portfolio, which is an easy, safe, diversified, and can give you dividends every single month. Which means that you're going to be paid every single month for doing nothing. How cool is that? And even more, say you are in your 20s, 30s, 40s, 50s, whatever, and you're ready to hold your investments for a long term, you can actually reinvest back all the dividends you are getting back to these ETFs and start gaining from compounding interest, from compounding dividends over the long term. That's the best approach. That's what I'm doing today, and that's what I plan to do for the next 20, 30, 40 years. And actually, I don't plan to sell any of the stocks, any of the ETFs, dividend ETFs that I hold, because they generate income every single month. So we're going to build a 3 dividend ETF portfolio today that you can rely on, that you can use, and start investing as soon as the video ends. That's when you go there. There's a link below where you can find the link to Questrade, Wealthsimple, just only those two. The only thing you would be required to do for maintaining this portfolio is keep contributing to your portfolio on a regular basis. Whatever disposable income you have, whatever money you have saved, or keep saving on a regular basis, just invest to this portfolio and start securing and improving your financial situation by investing long term. So enough talking about all this, let's actually dive into all these dividend ETFs and see what they are. So the very first one, and I think the most exciting one for today, is the VDYTO, which is iShares Core Canadian Quality Dividend Index ETF. And this ETF provides investors with the long-term capital appreciation by selecting a portfolio of securities with a high-quality balance sheet and a track record of consistent earning in the past. So only the best companies are qualified to enter this dividend ETF, and the companies that pay the highest dividend yields and can sustain those dividends on the long term. And the only downside of this ETF is that they have a pretty big allocation to financial sector, around 55%. And the whole thing about financial sector in Canada is a little weird because most of the ETFs have a pretty big allocation to financial sector. So you cannot get rid of it entirely. So let's take a look what we have here for our metrics for this ETF. The assets under management accounts for around $390 million, which means that this ETF has around $400 million of stocks in their holdings, which is a pretty decent amount, right? And also remember that this ETF is a pretty new ETF. It's been in the market only for 2 years, and it's already shown pretty good returns, and it's already becoming one of the most popular dividend ETFs on the stock exchange. The management fee for this ETF is around 0.11%, which is the lowest among all other ETFs we're going to be talking about today. And actually the lowest ETF among all other high dividend ETFs in Canada. The current dividend yield is pretty generous at 4.35%. So we're going to be getting a lot of dividends back, which is good. The share price as of today is around $22, so it's pretty easy entrance to the ETF. You don't have to spend a lot of money for your initial investment. And since the inception of this ETF around 2 years ago, the share price grew by 12%, which is pretty decent, especially considering this is the dividend ETF, it's not the growth ETF. So we're not expecting a lot of market appreciation here, but still we don't want a share price to depreciate, right? We still want to get this slow appreciation over the long-term period, and we're getting it here. And I got some comments from my previous videos where people asking to add the DRIP back to my metrics, so today's the day. And DRIP stands for Dividend Reinvestment Plan, which is basically an automatic reinvestment of your dividends to the same stocks or ETFs where they came from. And I do it as much as possible for my stocks and ETFs because my strategy right now is not to use the dividends I'm getting back from my stocks and ETFs, but reinvest them back to the same stocks and ETFs so I can gain from the compounding dividend growth on the long term. So the DRIP for XDIV is around $6,700. So it's on the higher end, I know that. It's pretty hard to start with the DRIP right away, but once you get there, you're going to be getting single free share every single month. So you're going to be getting even more dividends back every single month. How cool is that? Let's continue here. This is actually my favorite dividend ETF. Low MER, high dividend yield, easy entrance, and easy DRIP. Right? So let's move to the next one, which is XEI.TO, which is iShares Core S&P TSX Composite High Dividend Index ETF. So this one is also managed by BlackRock, the same as XDIV ETF we just talked about, and it seeks to provide investors with exposure to the income from high-quality dividend-paying stocks in Canada. And this ETF is designed to be a long-term foundational holding. That's what we need. That's what we are looking for from our dividend ETFs. We want to hold forever. And this is the perfect ETF for that. In terms of its holding, this ETF is very heavy into financials and energy, 30% each, which is pretty big chunk, right? And then last year showed us that during the market crashes or some economic not stable conditions, the performance of such ETFs could be not that great, but still we're going to be getting our dividends back no matter what, every single month. And that's what we're looking for here. And once the financials and energy stocks bounce back, the ETFs start to perform better in terms of the market appreciation as well. The management expense ratio for this ETF is also on the lower end. It's at 0.22%. It's definitely higher, 2x higher than the XDIV ETF, but it's actually on the lower end compared to all the other ETFs, dividend ETFs on the market, which I also like because the fees end up eating up a lot of the returns from your investments. Let's take a look what we have from our metrics here. So the total assets under management for the XEI is around $900 million, which is pretty good, and it's been growing consistently over the last 10 years. The management expense ratio, as we just said, is at 0.22% and is considered to be on the lower end. The current dividend yield as of today is at 4.41%, so it's pretty generous, and we're going to be getting quite some decent amount of dividends back every single month from this ETF as well. The current share price for this ETF is around $23 as of today, so it's a pretty easy entrance if you're considering adding this ETF to your portfolio. And over the last 9 years, the share price for this ETF grew by 16%, and as we just talked about, financials account for 30% and energy stocks account for 30% as well, so it's a pretty big chunk allocated to 2 individual sectors alone. So consider that when you're making sure your portfolio is diversified enough. The DRIP amount for this ETF is at around $7,000. So if you want to reinvest all the dividends you are getting back and get a single share of this ETF back with every dividends, then you would need to invest around $7,000. It's a pretty big chunk, but at the end of the day, you're combining from these automatic reinvestments and long-term dividend growth gains. There's another ETF which is very similar to this one for some of the parameters, but a little different in terms of the holdings it has. And it is VDYTO, which is the Vanguard Canadian High Dividend Yield Index ETF. And this one has a similar MER of 0.21% compared to 0.22% for XEI ETF that we just talked about. The dividend yield is also very similar, is at 4.16% as of today. It has a pretty easy entrance to this ETF as well. The share price as of today is at around $38. And now getting to the differences, which is the share price growth over the last 9 years is around 60%, comparing to the 16% for XEI And the second difference for this ETF is the allocation to different sectors. So they have around 60% allocated to financials, and they also have around 20% allocated to energy. So combine this together and you're getting around 80% of financial and energy stocks. That's wild, right? For the other ETF we just talked about, the XEI, we only have 60% combined for financials and energy. So I would say the XEI is better diversified than VDY ETF, but if you're okay to holding a lot of financials in your portfolio, then both of these work for you. But I think the XEI is actually better than VDY, but I'm not a financial advisor, I'm just a YouTuber who talks about stonks and shares his own experience. So it's up to you and do your own due diligence when you're deciding what you want to invest in. And the final ETF I want to talk about today is actually a pretty exciting one, and I love it a lot. I also invest in it, and I think it's a great holding for long term as well, which is the VDYTO, which is the iShares Canadian Dividend Aristocrats Index ETF. So this is considered one of the best Canadian high dividend ETFs on the TSX. And let me tell you why. This ETF is actually trying to replicate the performance of the S&P TSX Canadian Dividend Aristocrat Index. And this index primarily consists of the dividend-paying stocks or income trusts listed on the Toronto Stock Exchange that have been paying and increasing their dividends at least for the last consecutive 5 years. And this provides to investors with overall growing income every single year. Because the ETF is going to manage all their holdings, and if the company all of a sudden stopped increasing their dividends, it's going to be kicked out. And if there's a new company on the market that started to become a dividend aristocrat, it's going to be added back to this ETF. So they can do all the management for you, you don't have to do anything, and they'll make sure that all the holdings that they have will be consistently those that are increasing their dividends over the long term and paying dividends consistently. And holding this ETF will definitely increase your dividend payouts every single year without even you contributing more to this ETF. How cool is that, right? And another good part about this ETF that their sector allocation is a little better and more diversified compared to the other two ETFs, or three ETFs actually, we just talked about. They have around 28% in financial, 15% to energy, and the rest goes almost evenly to the other different sectors. And talking about Canadian Dividend Aristocrats, I actually have a video where I talk about the best Canadian Dividend Aristocrat stocks. So if you want to pick your own stocks, go check it out. Let's see an overall metrics for this ETF. The assets under management accounts for around $800 million, which is pretty decent, and they're growing over the long term as well. The current management expense ratio fee is actually at 0.66%. So that's the downside, that this ETF has a pretty high MER compared to the other three ETFs we just talked about. So you might want to consider that when you're adding this to your portfolio. The current dividend yield as of today is around 3.47%, which is pretty decent. And remember, this ETF is going to be growing their dividends over the long term every single year. And we're going to be benefiting from that also. The current share price is around $30, so it's a pretty easy entrance if you want to invest into this ETF today. Over the last 9 years, the share price grew by around 40%, which is pretty good. We see this consistent long-term growth, and that's what we want from our dividend ETFs. We're not expecting the share price skyrocket to the moon as Bitcoin, but what we want is the consistent dividend payouts and consistent dividend increases over the long-term period. The current DRIP for this ETF is around $11,000, so it's also on the higher end, but you can start investing into it and get to your DRIP amount soon enough. So you can start benefiting from reinvestments every single month that will give you a single share of this ETF and will increase your dividend payouts over the long term as well. The other controversial ETF for this CDZ ETF is the ZDV ETF from BMO, which has a very similar approach, meaning that they have a very diversified portfolio. However, their MER is a little lower and they also have a little higher yield. So it means that these two ETFs are very competitive, and it depends what you want from your investments, how you want to see your investments growing over the long term. Are you looking for dividend growth over the long term, consistent dividend growth, or are you looking for higher dividend yield as of today and a lower MER, right? So it's up to you what you want to do. you make a decision how your investment is going to look like. But overall, if you invest into 3 or 4 of these ETFs, and that's going to be it for your portfolio, you're going to be getting dividends paid every single month. What you do with your dividends, it's up to you. Right now, I'm reinvesting all my dividends back to the stocks and ETFs they're coming from. What's going to happen tomorrow? You tell me. Thank you for stopping by. Make sure you like this video, subscribe to my channel, hit the bell. Let's make sure everyone else is involved with investments, and I'll see you around. Cheers! Bye.